The recovery has started for United Health Group, although stock price has not really figured it out yet. So let's talk about United Health and where I see the stock going in the future. So we saw earnings recently, we saw stock price jump on some of the positive headline figures. We will take a look at those in just a little bit, and then we will take a look at the criminal in the drama that has caused stock price to slide a bit. Of course, macro plays a part as well, but there is one specific number in this case that is spooking investors. Although, if we zoom out a bit more, we can see down 30% year to date. Although, since we started buying this stock, since I started buying, and I've seen some of you guys do as well, stock price has started to recover. I first got my eyes on this stock when it was way below $300 a share, and I will continue to buy this stock in my dividend portfolio all the way up until $395 a share, or until I'm happy with the size of my position, which currently is, I think, 15-16 shares, something like that. So not very large, but continuing to build it. All right. Let's take a look at some of the numbers. Just the headline numbers, they look amazing. We're raising guidance. We're seeing a beat here in revenue, so top line here grew 12% year over year. Very important for a business. We can see that price to earnings here, still a bit cheap, but I think that this will catch up. We're going to get into that later, but yeah, third fourth quarter earnings $2.59 a share, adjusted earnings $2.92. Some profitability, no immediate danger. It was a beat compared to what Wall Street expected. We saw a cash flow from operations of 5.9 billion, not something you would see from a struggling business, which the share price might make someone believe if they're just looking at stock price. And of course, the raise in full year guidance. So just off the bat, learning these things, stock price jumps. But then as we dig in a little bit more and look at page 3, in this case for the operating margin, we can see that this one is down by quite a lot, especially comparing quarter over quarter here, or the year on year, from 5.6% for the same quarter in 2024 to 2.1% for the latest quarter here. And this is the criminal in the drama, the low margins. Top line can grow all it wants. If they have razor thin margins, like they were a grocery store or something like this, well, investors are not going to reward this. And this is one of the big reasons for the recent drop in the stock price. We saw medical expenses being way more expensive than expected. Healthcare is costing a lot today with inflation, and the premiums that were written in the past do not reflect this increased cost. So margins are a lot lower. It was a miss from the entire sector. Everybody is down on this. So it's a low tide, and in a low tide, all boats are sinking. Yes, indeed. This will be fixed, in my opinion. I've seen this in the past with home insurance. That was a smaller company. We were able to make a lot of money on Porch Group in that case. However, for a company like United Health, look at market cap, almost $310 billion. They are not going to have those extremely volatile price swings that we can see from a smaller cap company. However, this stock is very likely to 2x up until 2027 once new premiums are being written that are reflecting the higher cost of healthcare. And if we look online, if we do some research on our own, we can look, for example, Reddit, just take a look there. Take a look at the health insurance premiums that your employer is paying for you or that you are paying for yourself. We can see people complaining about this online already, on Reddit, on YouTube, on many different parts. I saw a video recently. A financial advisor was giving an example of a client who wanted to retire early, and she had to pay roughly $2,000 a month to cover healthcare until it eventually rolled over to more of a social security type plan. I think it was called, I don't remember the exact name in this case, but steep healthcare costs to cover that gap between retiring early and the social security net taking over, bringing down costs more. So the reality of more expensive premiums is already being seen out in the real world. And then remember, these quarterly earnings, they are trailing indicators. We saw what happened last quarter. We're seeing these price increases in premiums happening now once we have these refreshes, and this will be reflected in operating margin here, both for Optum and for United Healthcare. If we scroll down a bit, we see for Optum operating margin being quite low there as well, from 7% to 3.6%. So once we see these premium increases, well, then we're gonna go back to good old stock price numbers, in my opinion. And with the nice top line revenue growth that we have, could go even higher. And with this probe that's going into the practices of the company, once that is resolved, I think stock price is going to go even higher in this case. What tends to happen with these investigations? Well, you make 3 billion and you get slapped with a fine of 250 million. Who cares? It's like a speeding ticket. It's the same for banks. And I think that just the market worries way too much. If they're innocent, if they're guilty, it doesn't really matter. It's going to be a slap on the wrist. And with increased premiums here as well, this industry is so heavily regulated, so these businesses, they are pulling up the ladder behind them. So it's not like your neighbor can start a health insurance company out of his garage tomorrow because premiums are so insanely high and too much profit is going to us investors. No, the American people are just going to have to suck up to the higher premiums, and we will be rewarded as investors in that case. That's the harsh reality of the business environment and the increasing cost of living. That's been it for this video covering United Health Group. And as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.